Morning all. Friday's here. Nearly time to go down the pub. And finally, the sun's made an appearance, even though it was just under 7 degrees this morning when I took the kids to school. It's like winter's here already. Light switch weather. Love it. Morning, Kay. How you holding up?
Morning, Ryan. Yeah, I'm starting to feel better, mate. Starting to feel better. Thank you. And
Good.
morning, everybody. Yeah, winter is here, as we said yesterday. So yeah, we're ready for it. The igloo is sort of finished.
Yeah, that's good news. You're feeling good just in time for the weekend.
Yeah.
That's the way to do it. That's the way to do it. Right, as we're trucking through September, I don't want any of you to miss out on the sale we've got going on the ForexAnalytix platform. If you've been I'm in an ahhing, undecided on whether to do it, this is the best time to do it. You'll get a very cheap price and you'll be able to lock that in for as long as you subscribe. So if you want to get into the chat room and get involved in all the goodness that goes on in there, the trades, the analysis, the views, which is obviously 100 times more than what we put here on the Flow Show, now's the time to get involved. So have a think this weekend. If you've made good money this week, think about investing it in yourself and being able to maybe increase your profits by taking some advice and just getting into a good crowd. Right. Anyway, going to move on from that. Over in China, this is a bit of a global move, but it's looking a bit significant anyway, as far as China concerned. They fixed down by quite a chunk today. They fixed down at 7.1030, 7.1030 versus 7.1214 in the last fix. So quite a significant drop there. We are seeing another sell-off, part of a broader dollar sell-off, part of a broader yield move lower. So this one's still not out the woods. I'm still twitchy to start maybe picking up some longs, but I'm going to be very, very choosy where I start that. I'm potentially looking for a move maybe down to the low sevens. Kay, I know you've started already on this one. What's your thoughts behind that?
Um, and obviously, we know what's going on with the dollar. We saw this fixing. I just think that it's perhaps temporary in China, and I've got other positions on the side, so I just started to leg into very very small dollar China with loads of room. Position is not meant to grow too big in any case before the Fed, and will be basically covered by other stuff that I have running. But I still think China is not out of the woods. So there's a few levels in the Chinese yuan that I'm getting a little bit interested in. Obviously, we need to leave either room in the moves or lots of room in position size. So I started extremely small, just above 710, and ready to continue to leg in to build up a small position there, just because of potential rate cuts coming over there as well, and the fact that they have a lot of trouble to get out of the slump that they're in.
Yeah, and one thing that is striking me with this, and maybe it's probably mainly due to the volatility or lack of volatility compared to prior years. They've been very quiet on the currency officials over there, which suggests they're not really bothered at the moment as to whether it's too strong or too weak. Do you think that's something that we need to see a move before they start
Well,
to start
uh,
squawking?
I think they're pretty happy about how it goes now. The dollar is yuan is relatively stable. Let's put it that way, because we can see 300-400 pips in dollar China, but that's percentage-wise very, very small compared to stuff that we see in other currencies, and then especially comparing to the dollar yen, for instance. But yeah, I think they're relatively happy now. I think they would even be happy with a gentle slide of the Chinese yuan, but the lower dollar is helping their cause right now. But on the other hand, it's I don't think investors are coming into China yet, because that is something that we need to obviously monitor. If China succeeds to turn around the economic slump that they are in, obviously then dollar China is going to collapse. But I think they're relatively happy with what there is now, because if the dollar would be strong, I would also think that they would be happy with a very, very gradual, gentle slide lower of the Chinese yuan. But now there's no reason for them to do anything at all, and they're very happy with where it is now. They're not seeking to strengthen the yuan right now either, I guess.
Yeah, cool, cool. So yeah, we're both likely to be on the same side on this one. I think I'm just going to wait and see if we get some better levels. I don't see these
Yeah,
global growth worries disappearing anytime soon.
yeah,
And
exactly. And also, let's not forget what happened since the start of August. Every Monday morning session in Asia is a bit of a dramatic one. So that's also the reason why I'm keeping stuff like extremely small right now, is that we see nasty accelerations in some Monday morning Asian sessions. And if you look at how the dollar behaves right now, I mean, it's not something where I'm willing to go full gangbusters along dollar China. It's absolutely no use. We may be at 702, 703 come Monday if the Asian session is anything like it's been on some Monday mornings in the past weeks.
yeah, yeah, very much so. So yeah, I'm not. I can tell I'm not at the FOMO stage yet. When I am, I'll be dipping in with you, but I'm not quite there yet. Right, speaking of China, and again, this is part of what we're seeing in a lot of markets at the moment. Their 10-year yield fell to a record low of 2.0775%. I'm not sure I've got Chinese yields up. Oh, yes, we do. There we go. So, you know, these are record lows. So compared to other countries which have seen obviously rises in yields and whatnot, this is going the other way. So this, I don't know if this is weighing on the general yield space or it's been following the others. If we look at 2-year yields, they're continuing to slump. As you can see, it's a sea of red across the majority of the yield space there, and that's why we're getting these moves coming in. It seems more dollar weakness today, mate. Before we've seen this drop in yields, well, all through the week, the last couple of weeks, we've got a move in yields, and we've seen yen strengthen as well on the back of it. It hasn't so much been the dollar, but today it feels more dollarized, if that's a pertinent saying.
100%, 100%. Look at just all the currency pairs, right? It is a dollar move. It's the biggest market. There's still uncertainty, even post Waller and data. We would have said like, okay, this is a 25 and done. But there's enough people apparently putting doubt in the market's minds that we still may be in for a big cut. So yeah, the dollar is really the one that's getting hammered. We've also seen yesterday that reversal that we had in some of those pairs. We've been talking, and you've been talking about the 110 in the euro dollar, for instance, the low 66s in the Aussie. We've been highlighting a couple of other, the 130 in cable, for instance, and all those levels held. And then seems like some of those dollar players have been waiting for the ECP to be over, and then okay, now we can get back into the market. All right.
Yeah, very much so. Very much so. We'll talk about prices, obviously, in a bit more detail in a moment. Now, story out about our mates in the hedge funds. They're apparently piling into options for a further rally in the yen. They're apparently doing so by buying Aussie and Swiss puts versus the yen. It's a measure of how things change. Back in May, they were all piling in to options for yen to weaken past 160, and now they're all running to the other side of the boat. Likely they've been doing this for a while, so this news is likely after the event, as it often is. So we'll see whether those guys manage to make any money out of it. Right, ECB, they cut the rate 25 pips as expected. They brought their other rates down by 60 pips as also expected to get those more into alignment. In the forecast, it was pretty much a dull affair in the end. In the forecast, there was slight downward revisions to growth throughout the forecast period. Each year lost a pip each. They explain that away, saying those cuts are mainly owing to a weaker contribution from domestic growth. That's the reason why. CPI was unchanged. Headline CPI forecasts were unchanged for 2024, 25, 26. But the core did get hiked a pip in each of 2024 and 2025 years. No big change, but it wasn't a bearish set of forecasts, dovish set of forecasts in its as it was presented. The ECB said the usual waffle. They will not pre-commit to a particular rate path. They're data dependent, meeting by meeting, blah, 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 blah. Lagarde had an absolute stinker of a presser. It was quite hilarious, actually, this one. I can't recall much of what she said. It was a load of old blathering on. Though she did say that based on surveys, the recovery is facing headwinds, though the recovery is to strengthen. And says fading monetary policy restriction could support the economy. Then we got a couple of funny things happening. One of her lines, she was talking about the October meeting. She said, "We can all count. October 17th is 6 weeks away." Well, some bright spark on Twitter went and counted, and October 17th is actually 5 weeks away. So we can count. She obviously can't. And then 45 minutes into her presser, while she was still waffling on, one of her governing council members popped up on Twitter with a tweet saying, "This is all you need to know about today's decision," and put up a link to the statement. That seemed pretty rude, seeing she was still in the midst of a press conference. So that made a few of us chuckle. After all the ECB stuff was out the way, money markets pricing roughly 38 pips of further cuts by the end of the year. That was down 2 pips from before the ECB kicked off. And then we got the usual sources stuff coming out after. Bloomberg dropped a piece saying that officials had not ruled out a rate cut at the October meeting. And then Reuters dropped a piece saying that the October rate cut is unlikely for now, and a move before December would take exceptional negative growth surprises, according to sources. Now, that line would take exceptional negative growth surprises has just been clarified. We may have found our leaker, one of them, because ECB's Kazakhs popped up just before the show started to say that high rates may be slowing the economy more than necessary. And he said an October cut would need a significant economic slump, which, as I said, that pretty much echoed that Reuters piece. So put 2 and 2 together and you get a leaker. And, well, it's been floodgates from the rest of them anyway. Just to go over some of them, ECB's Ren says current uncertainties further emphasise the dependence on fresh data and analysis about the economy. The road to the inflation target is bumpy. Weakness in euro growth is more structural than hoped. ECB's Vasile saying not committed to any predetermined rate path. Villeroy, ECB must be attentive to the risk of undershooting its inflation target, but the ECB should continue to gradually cut as appropriate. Market inflation expectations are well below ECB forecasts. That's an important thing to note, as we're always banging on how important inflation expectations are to them. Muller, temporary acceleration in inflation is likely. Services inflation is still a concern. I don't know why, but I'm going to ask your thoughts on the ECB, Kay.
Well, our biggest question in the room was what kind of brooch was she wearing yesterday? We're still not out of it. That took about half of the press conference, and then we let it go because we couldn't make any sense of it. But that's how interesting the press conference was yesterday. We had a 15 pips range on over the decision and the press conference. That tells you how interesting it was, that ECB meeting, and we're still none the wiser whether they're going to go in October or not. So that's where we are. So yeah, I'm moving on. I'm really moving on. I haven't learned anything in that meeting yesterday. Everything was as expected. Even the moves in or the expectations in inflation and growth were really, I mean, give and take 0.1 just to change something to their projections, I guess. I mean, just to use a different color also of pen. That's the only thing we can really take away from it. And yeah, the rest is it's already history and forgotten.
Yeah, good, long forgotten. Hopefully. Anyway, right, did get a bit of data out yesterday. We had some, I don't even know what the calendar set up. No, I haven't. Boom, boom. There we go. PPI data, which again was a bit of a non-event, coming out round about expectations. No real volatility in that number there, depending on what calendar you used. You looked at, this came in either a bit lower than expected or unchanged. So nothing there. Initial jobless claims, another one, not showing anything at all, staying pretty steady. Even continued jobless claims coming in as expected on the nose, which is fairly rare for that one. Shows you how much how boring this one is at the moment. So no clues at all from those numbers. Maybe you could just say that that PPI is perhaps still showing a bit of stickiness. We're not seeing any wholesale negative numbers there like we are seeing in other countries, which that sort of mirrors what we got from the CPI numbers, particularly that core number staying unchanged the other day too. So nothing much to take from that. Donald Trump lost his bottle after the Harris debate, said he wasn't going to debate her again, then popped up saying he was going to debate her again, and now he's been out on his own Twitter thing, Truth Social, saying that he's not going to be debating with Harris again. So take that for what it is. Still, we've got the bubbling situation going on in Ukraine. We've been speaking about it for the last couple of weeks, how things are just starting to increase in what we're seeing, activity over there and the talking and the jawbone and whatever. So Zelensky has been talking to his Western mates. He wants to still increase the use of weapons, missiles and stuff he's taken from the West in Russia territory, which we know has been a bit of a red line for Putin. Putin's been out issuing a warning to NATO, saying that lifting Ukraine missile restrictions would put NATO at war with Russia. So this thing is still slowly creeping up in heat. So just keep an eye on it. Let's hope sensible heads prevail, but you never know. Apart from that, it was a bit of a quiet afternoon yesterday, so we've not got much coming up today either. Just looking at the data, got some import-export prices, which no one really pays much attention to. We've got the US data, basically the flash Michigan numbers. So this is a little look at the consumer side of things. Obviously, inflation expectations are going to be closely watched too. Sometimes this data, when things are a bit quiet, can be a bit of a mover if there's a big variation in the numbers. So don't cross it off your list just yet, but we shall see. That's about it. So markets today largely going to be on its own, walking around on its own steam at the moment without any data input to play with. Kay, you got anything else to add to the picture?
No, not really. It's been actually quiet overnight, right? On big news, it's just the market doing its thing, really. Well, you got those sources pieces and opinion pieces where everybody wants to have their say. No, I think we covered everything. I think the big actually uncertainty that came back after Waller and US data is, it seems that the door to 25 or 50 for the Fed now next week is still wide open, and that was something that I think the market picked up on after the ECB. As I said before, seems like people were just waiting for the ECB to be done and dusted and then go and hammer the dollar again.
Yeah, yeah, it's been another one of those moments. Yeah, look, I mean, looking at prices, the euro, like you said, it was really glued, and I was actually getting a bit worried about it because I thought if those forecasts weren't too bearish, too dovish, we'd see a bit of a stronger push up. But then, obviously, we had all those options floating around as well, so it wasn't a surprise that we had to get over that hump before we saw the move happening. But technically, euro held where it needed to, down into that 110 area. Thankfully for me in my longs, I wasn't too happy with it being 14 pips away into the ECB. But here we are up testing the 111. We've chewed through, some of these levels around here, 110, 40, 50 area. We've had this minor level, 110.70s. We got above that, had a little bit of a bump into it on the way up, got above it, got it as support now. So technically it's doing the right thing. It's now moving into the zone above this 88, 90 area, trying to hold it as support. Now we're trying to chew through the 111. I think if we get above 111, then we could be seeing another move up towards 112. I would think we would at least be testing this little couple of areas in here, 30s, 50s. But it's been a fairly decent move so far, 100 pips, give or take. And yeah, we'll see if it's going to do more, or if we're going to run into a bit of trouble here. It needs to get above this 111 just to look like it's breaking this downtrend. I know there's 100 flags in different pairs at the moment and assets around, and this is one of them. So I think if we get and build above 111, it's going to make this trend look like it's breaking. And then, as I say, we could be having another look at 112, and then we'll see what happens up there. Ali, I need to get off my chest my gold trade because I made an absolute pig's ear of gold yesterday. I'm always fond of telling people, don't trade what you think, don't trade your gut feeling, trade what you see in the price. But there's times, and it's an experience thing, and I know Kay shares it as well. There's times when you watch a price and you think this is going to go, this is happening, or this is going to move, and that's what happened yesterday. We were trading around here, and we were up in it. Just felt it was going to go. Now I had actually pulled my buy stops after we had the initial break, because my buy stops were at 37 and we were just trading 32s, 35s and dropping back and then going up there. It wasn't the explosive break I was looking for, so I got a bit tetchy about it. I ended up buying at 28s before the break, got some off, and then I got fucking shaken out when it came back down again. Complete noob move, and then I ended up with no buy stops, no long, no nothing, watching it taking off into space. So completely messed it up. So that just shows you, even with many years of experience, you can still make a pig's ear of a trade now and again. Kate, you did all right in that one. You stayed on your longs and you're riding this one nicely.
On longs,
where's it going from here?
Longs, staying, adding, yeah, and then slicing on the way up. Yeah, it finally happened, but then I was talking about that in the room as well. It was like, and yeah, noob or not, I mean, but it was one of those typical things where all eyeballs in the market were on it. It breaks, it gives the impression of a false break, stops a few of the early ones out, and then it ramped higher, and it's exactly what happened yesterday. Is one of those moves. It's so easy to get it wrong, and that's sometimes where you say And that's the other side of the medal. When you're already in positions like I was, that move was a bit easier to trade because the big picture didn't really change much. But if you are just in the position for that particular move, it's easy to so easy to get it wrong. And I think a lot of people did. I don't think you're on your own there, Ryan, at all. But it's no, it finally went, but not without a couple of extra tries, right? Um, yeah, what to say about it? Okay, the big level has broken. It's now going to be a massive support, 25, 30. But equally, for those who are not in this move, if you ever see it back down to 25, 30, I mean, be careful what you do because there's going to be a lot of people buying it down there. And you can be dead sure that there's going to be stop losses down there as well if it gets even down there. Okay. This to me is the move that I've been thinking about for a while now since we have been training that range. And I do think that there is a fair chance that we're going to go up to 26.5 at some stage, especially that we are still in the same scenario. Main central banks are cutting rates, but there's still some money flowing around. The dollar's getting sold. Equity markets are doing quite all right, but some people with the dollar being sold since it's the biggest market are probably still legging into that gold. And I'm going to be a very interested observer of what's going to happen on Monday's session in Asia. I don't know how far more we can go today. Of course, it can always ramp up another $40, but being Friday, of course. But I um, I think we're yeah. This is what I planned for because it stuck despite the dollar correcting in a lot of instruments, and we have to put everything in context, of course, because gold is how should I say, the metals, it's like an emerging market currency. You can't trade it $1 at a time. You have to look at levels and zones, but it stayed in that zone, very high zone compared to all the other dollars which were correcting. Like for instance, cable came down from 132.5 to 130. Euro dollar came down from 112 to 110. But gold, as a in comparison, never broke down below that 24, 70, 80 anymore. So this to me is just a continuation of the pattern. And as I said, I think next week is going to be very interesting. And then obviously the build up to the Fed. But I think already next week, Monday, is going to be interesting because I mean the Chinese so-called haven't been buying gold. I don't buy it. I think they have been in, but not necessarily the PBOC, but you've got another 1.2 trillion Chinese, right? Billion Chinese, sorry.
Yeah.
But yeah, I think on Monday is going to be an interesting one as well for this.
Yeah. And what I want people to learn from this. Okay. This is a big moment in trading. Okay. We've been talking about this range. It's come through, as Kay said, it's come through data, it's come through NFPs, it's come through other central bank meetings, it's come through that sitting in this tight range. Okay. And I spoke about this last week on the NFP where I was looking at a potential break, but I didn't want that trade to happen over a data point where you might get a proper fake out. I wanted this to break of its own accord at a different time without seemingly any other undue influences, because this is what you get when you get levels like this. We're tested 7 times, and then when levels like this break, they go. Okay, they go, irrespective of me getting messed around down here. It's gone. Okay, this is the sort of thing you can, if you get it right, you can capture a big move. Okay, and it has to tick the boxes. It has to follow certain conditions. When you get price action like this, you should be looking at break trading. You can do the same on the downside if you so wish. Okay, because you've got all these support points, not as many as you've got resistance, and it just shows you what happens when you get big levels, and when they go, they can go. Now, the other lesson to learn now is people who aren't long and are thinking, oh, crap, I missed out and I want to make money out of this. They're probably switching the other way and thinking, I'm going to try and be clever and try and pick a top. Okay, that's folly. It's folly for two reasons. One, we're in uncharted territory. Okay, this is all-time highs. Okay, there's no price history to lean against, no tech levels of price history to lean against. Yeah, you've got fib extensions and trend lines perhaps coming off of prior stuff, but actual price history, there is zero. So anyone who wants to try and pick a top in here is playing a dangerous game. Okay, so now you go back to the thing I keep repeating time and time again. This now is all about price discovery, letting the levels show up. Let the levels show up where resistance is going to be. You know, if you try to pick any one of these highs at the time, then you've been offside or losing money. Okay, it hasn't stopped. You want to see some price action where we hit a level and can't get through, because when you get that, then you get your down moves. Okay, if you want to be chasing this high, if you want to be buying it, you need to see where support is. I put these little lines on because they're potential levels where support may show up. It's all intraday short-term stuff. I'm not going to trade against these levels unless I get further evidence, i.e. multiple tests that a level will hold, and you have to treat them as they are. They are short-term levels, so you don't trust them too much. So you need to now, if you're not in a position here, you need to sit and wait, okay, and watch and see what the price does and let the levels develop before you start trading them, okay, because you could start shorting up here and the next level is 25.80 and then the next level is 25.90 and then it's 2600 and everyone's looking at 2600 and the market goes, well, we'll let you get short there and then we'll go and trade to 26.20, okay. It's a dangerous time, okay. So just, if you're looking at gold now, sit on your hands if you're flat and just let the levels come to you rather than try and be clever and guess them and pick them and whatever. Right, yeah. Let's have a look what else is going on. Stocks, I'm keeping an eye on that one. Again, potential break opportunity. We've got the big level up here, obviously. These prior highs, you know, decent double top, you can call it, give or take a few pips. And we're on our way back up there. This is a significant bounce. So if we get it back up here, then I'm going to look at this potentially for a break trade the same as gold. And hopefully I don't fuck this one up and make a mess of it like that one. But you've got two trades up here. You can maybe try a shorten again up here to see if it holds. But if we get a break after having this high, this move down and this return, and then a subsequent move down, which didn't get as much as that one, it feels like it's building for a move higher. Okay, so you've got one area, two trades. You can short against it. You can buy a break, reverse into a long. Okay, you don't need a bias for that. You can just trade the level. So I'm looking at S&P as another potential for a break trade. I'm also looking at it maybe for trying a short into here because I don't believe this move. I don't believe this rally in stocks when you've got global growth worries abound for the globe, you know, countries, US, everything. That's a big worry at the moment. But we are seeing a bit of reversal in that as well. If you take a look at oil, you know, one of the major commodities, that's, if I can find it, that's having a decent move. This was another one. I was trying longs down here, didn't like it as we broke down. If I'd have kept my stop and kept the trade, I would have been all right, but you can only trade the market at the time. So we're back above in Brent. We've had a little bounce trying to build again on this former support point. So again, let the price action tell you where the levels are. Okay. And if it builds on here, then maybe we're going to get a move retrace back towards, who knows, 76s, 78s, something like that. But from a risk perspective, this is slightly different again. You know, as we've been saying, dollar was getting creamed, yen pairs were getting creamed, yields were getting creamed, oil was getting creamed. Now we've had a turnaround in oil and still the dollar's getting creamed and still yields are getting creamed. So there's flows going on, okay, in the market at the moment that are not just about whether the Fed's going to go 25 or 50 next week. Okay, there's bigger fish to fry here. So things like commodities bouncing now, is it going to last or is it has the fundamentals changed? And I don't think they have. So you've got to be wary of commodities rallying. Kate, I'm going to bung it over to you, mate. If you've got a couple, you can give a bit more detail on the gold. And seeing as you're in it, give me a mo. Where are we? There we go.
Cheers, mate. I was just asking Derij if he's in a position at all. Yeah, so not at the moment. I came out at 25.60. Yeah, well, you know what? I think it's on the day, it's not bad because I've also let some go here towards that level. But this is the way I trade, okay, guys? I mean, for those who are new or haven't been on the thing, we Ryan and I use kind of the same kind of trading strategy, like legging in and out of stuff. And that's what I'm doing as well. And now I'm actually waiting to see if we can get down to 25.5 again, maybe to reload. Who knows? But I was just going to highlight a few extra levels here. And Ryan says about price discovery. Okay, when you reach new highs, I mean, technically there's only one or so thing to do. Either you put like trend lines, and if they show you some potential directions, that's fine, or you use extensions like I'm doing here. Now, just to say this is a big break, especially if you go on the shorter time frame. It's even worse. You've got many attempts to try and break, and it finally went. So this is strong now, okay? But as I said, it's going to be equally strong back on the way down. So I can expect um, people who haven't loaded up or who have been taking profits in this round, getting perhaps even already at 25.5, but really strong. We should find really strong bids now, anywhere close to 25.30. But um, there's something interesting here, and perhaps somebody has different levels. But if this one holds on a close, and I've been talking about those Monday morning Asian sessions, right? This looks to me, if we hold this 25.65, for instance, and or even 25.5 on a close come Monday, um, Derej, I understand when you say profit taking, yes, but I would not go into the weekend short gold, even if on Monday it opens at 2,500. I would not go short gold over the weekend just because of those famous Asian Monday mornings. And remember, we did the first high in the first high. You remember those highs above 24? They're all being done in Asian Monday mornings. Okay, all those ramping higher. So be very careful if you stand in the way of anything dollar related. For instance, if you say like, oh, I think the dollar has gone far enough. There's one instrument where I would not do it in this case is gold, because of the risk of those Monday morning Asian sessions, regardless what happens everywhere else, because gold can do stuff on its own. As I've been saying already, we stuck into that range even when the dollar was gradually correcting. And the percentages are very different because gold is a different instrument. Okay, if you start to talk about gold or metals, the percentage of moves are fundamentally different of what's happening in FX, and especially if you compare it to euro dollar, for instance, which is the world's deepest foreign exchange instrument in all markets. Okay, this is your deepest market that you can imagine. So the percentages are going to be smaller in the euro dollar, but you look, we went gradually down in the euro dollar, and what did gold do at the same time? It was like doing the yo-yo, and when the dollar recovered, it kind of went down as well. But we never went back below levels that could have been seen, for instance, in July or May, and that was to me really telling. So this is one where I'm saying, like, regardless what you think about any other dollars, this is one where I don't want to stand in front, because we never know what's going to happen on Monday morning. Okay, and as I really, on my picture, I don't see anything for the next $50. I wouldn't even be surprised waking up on Monday morning and seeing it hit this level, for instance. Where I do think, though, that we will have a cluster of resistances. And sorry for the chart being not so clear, is here. And I have it on a even longer time frames as well, 26 and a half. This is where I think they really going to be extremely important if ever we see these levels, okay? I know people are talking in the market about 3K and whatever. I mean, there's always wild dreamers around. And it can happen over time, I don't know. But this is going to be, to me, the next mega hurdle, okay, for gold. So that's for those who want to trade metals, okay? So on the downside, 25 and a half, 25.30 is now what we clearly are watching, okay, on the day. Um, yeah, flags everywhere. I just want to touch. So this is the euro dollar. We're obviously around 111 here, the level that Ryan also already highlighted. And then look, because people say like, oh, we're seeing flags everywhere. Indeed, they are everywhere. And this level here is 111, call it 30, 35. I think this is going to be already a pretty important level if ever we touch it this afternoon, our time zone or so in New York before the week is over. Personally, I'm still not a huge fan of euro as such, but there are other currencies as well showing a bit of resistance coming up, and one of them is obviously we are back around those prior highs in the cable here. And I think that's going to be important enough to close the week. We're back above trend lines 131, 130.80. Those are going to be your supports now. But keep an eye on whether we close above or below this 131, 40, 45. I think that may be already interesting. And there's another one that is behaving equally interestingly is that we're gone up in the Aussie. I've taken profit. I've taken profit just around here, 67.10, because I think we should respect this trend line for a starter. The 50% of the move lower is also coming in at 67 and a quarter. And look at what we are doing right now. We had a bit of an overshoot in Asia. We tried it again just half an hour ago to get above 67 and a quarter when it's rejecting. I think this is your gateway above or below. This is your gateway to get back to 67, 60 or 68, 68 and a quarter. But respect that level. This is one that I wanted to highlight as well today. And another one, and you can see, and I'm going to put it on you can see that the dollar is off and even dollar max is coming down, right? Rejected above 20. There's a lot of politics going on over there. Next week, there may be real decisions being made because we know that more than half of the what is it? The Senate is now has now in words agreed upon AMLO's text for this judicial system reform. But yet dollar max has come down. This is a dollar move now as well, I think. So, but watch out for next week. And I also would say like if we get an extension down to 1920s, 19 this is already 1900, but I would say already 1920s. Obviously, 1900 is going to be a big one as well on the more medium time frame. But already 1920s, keep an eye on because you may find some people got out of the dollars and then finding a bit of a support here. And last one that I'm going to show today is all around. Yesterday there was uncertainty about the coalition in in South Africa. And we went up to test the 1802. And again, I even tried to go for the break, but gave it up after 400 points. And the that's what the song says. Yeah, the first cut is the cheapest, or was it? It's maybe something different. Oh, the deepest. No, this one was the cheapest. So I went out of it very quickly. But look at it, that 18. 00, 1802, 1803 in dollar rand for those trading emerging markets. This is really now shaping up as being a biggie, okay? The rest is dollars. Watch out 1760. If you get back below 1760, I wouldn't exclude a percent or so extension back to those July 2023 lows. to close the week, actually, if the dollar gets more knocks on the head. I'm not having a position in here right now, but I'm patient actually on a couple of currencies as well, but I may hold those back for another day. All right, and I'm giving it back to Ryan on the correlation. Bran, yes, the correlations can come and go because you trade different stuff. Like yesterday, there was no. I love to trade correlations. Like for instance, if risk goes higher, I like to be short euro commods, for instance. But yesterday, it was really a case of just let's hammer the dollar and not look at anything else. Okay, and then it's very hard to find other correlations. But the correlation yesterday, and correlations come and go. The correlation yesterday was the dollar. The dollar was the centerpiece of your on your dinner table, right? And that was what's being traded yesterday. So always be vigilant for when correlations change. They can change quite rapidly, especially the past few months, and I even say years after the pandemic, that we are in accelerated correlation changes all the time. Back over to you, Ryan. Thank you.
Thank you very much, mate. And yeah, and always know with correlations, you know, use them as an indicator of potentially why something's moving. If you spend too much time watching one side of the correlation to trade the other, just trade that side in the first place. You know, people put a lot of effort into things like oil and CAD, and they scrutinise oil markets just to get a trade in CAD. Well, if you're scrutinising oil markets that much, trade oil markets if you put in the effort into that. Just lastly, Ali, your question on euro sterling. No, I'm out my short. I got out my short after we had that move to 84.60. I came close to getting stopped out, and then I decided I don't like the price action, so I'm going to. I closed out the rest of it in the 40s. I'm neutral, but I'm a potential buyer into the 84 and a flipper if 83.80 breaks. We're in this range, 84.86, with that pivot area in the middle at 85. So that's all I'm looking at for that for now. Right, that's it. Thank you very much, Kate. As always, glad you're feeling better. And thank you to all you wonderful people for coming to the Flow Show this week. Have a great weekend. Reset, refresh, and we go again on Monday.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.